Navigator, and I just thought I'd give you an update on our US 500 trade. And for those of you using interactive brokers, it's a similar trade. You're using SPY or the XSP at the 640 strike. So you can see we're down about 1.3% on the trade at the moment. And the reason for that, obviously, the S&P 500 sold off yesterday. But what I want to spend this session doing, A, is just to remind you what the strategy is, and B, why I like it so much. And whilst I'm very, very confident we're still going to make a 4% return on investment on the US 500 challenge by the end of February. So let me just bring you into a chart of the US 500 and remind you of what the strategy is. So first of all, what we did was we applied this to the US 500. So this is an index of the S&P 500 companies. And the reason we use indexes with this strategy and not individual stocks is that the price movements on indexes are more predictable than the price movement on stocks. An individual stock can go up big on any given day, but it can go down big too. Whereas indexes tend to move more smoothly. Why in this case? Because there's over 500 companies in this index. It's as diversified as you're going to get in terms of a stock market index. So that's number one in terms of the risk management. Number two, the strategy we applied was actually selling a put option. So rather than us jumping in and saying we were going to buy the S&P 500 stock, we basically insured the value of it for a cheaper price. And in our case, we insured it to the value of 6,400 down here. And we took in a premium for doing that. In other words, we got paid for providing that insurance. And that brought our break-even price down to around the 637 mark on this. So what does that mean? Well, if you look at where the S&P 500 is now, it could actually fall here another 6% before we get into trouble in this trade. In other words, we profit if the US 500 goes up, if it goes sideways, and if it falls, so long as it doesn't fall 6%. And that's why, even though we're in a temporary loss situation on this trade, actually, so long as the S&P 500 remains above our break-even point, we're going to make full profit of 4% by the end of the month. Because we have 6% leeway to the downside, this trade still has a 90% chance of being profitable. So it's actually still an excellent trade. And I thought this learning is great. So far, we've been doing this. We've gone straight into profits. I think you learn more, personally myself, when you actually see some temporary losses and how we manage them. And it's important for me to explain that whilst nobody wants to see this, actually, by the end of the month, it's most likely going to be plus 400 by the end of the month. Right now, obviously, because the S&P sold off, and let me bring you into another chart here. This is the VIX, which is your implied volatility. So when the implied volatility is going up, usually the market is going down. And that's what you're seeing here. So when implied volatility goes up, option prices go up too. And because we sold the option premium, that's not a good thing for us. But what tends to happen, volatility after it spikes, it tends to come back down. And then that's going to be a good thing for us. So I would be confident we will go into profit on this trade by the end of February. And again, I just wanted to highlight to you that there's no panic required here. If you're in individual equities yesterday, some of them got absolutely crushed. And that's why we prefer this strategy and why it's one of our favorites. It's because you have so many outs for this to go right. Even with a bad day yesterday, we're still confident and we still have a 90% chance of winning. So I just thought I'd update you on that and try and explain as we're going through these trades. I think it's a great opportunity for you to learn about managing your trade. So the final thing I'll say here is that if this does start to fall further and we get to 6,500, then we will invoke our risk management plan. And a risk management plan is to roll out and down. So this is where we would just extend the time frame of this trade out for another month, and we would bring our break even down to below 6,000. So we already have our risk management plan in place. So just wanted to highlight that for you guys. If you have any questions, as per usual for the Share Navigator members, please go to the knowledge base, click on the bubble on the right hand side and chat with us. And we would encourage you to complete the short put course again in the knowledge base just to understand what I've just said. Okay, thanks and bye for now.